The Fed has ruined the markets. The massive investment corporations are now literally saying they're just going to learn which assets the Fed is buying and copy whatever they do. Is this really a free market? Of course not. It wasn't before, but it really isn't anymore. Many will follow the trend and buy into it. They'll feel confident as the bubble grows. But just as we saw in January and even into February, investors will ignore everything and anything to chase their dreams of ever higher stock prices. You came here for the truth, so let me unveil that for you. Today we're going to look at 10 years of jobs erased. They were erased in a matter of 4 weeks. My, how quickly things can change. I'm going to show you what's happening with FANG stocks achieving a record high right now. We're going to look at what's happening in the economy and how that hits you in the pocketbook. We're going to look at every factor you need to know, and I really do think it's important to see it from all angles. Not just saying, buy the dip, bro. That is not an actual statement that should be shared anywhere. It's quite embarrassing. Another 5 million people filed jobless claims last week, bringing the total to almost 22 million in 1 month. This is what we're dealing with right now when you can see statistically over and over and over again, the numbers keep piling up and they do not look good. This was expected, the 22 million. Nobody really seems to care though in the investment community. They're just going after whatever they can by the dip because the Fed is in the market. Well, something's really interesting that they haven't figured out yet is that there's always a delayed reaction. Are all of these corporations necessarily going to keep all their employees? Yes, we know that a lot of this, it's temporary, the temporary layoffs. But what is the impact of a temporary layoff even for those who are making 6 figures a year? It's big. It is really big. A lot of those people are going to be ruined for a long period of time. A lot of them will have to go bankrupt, and that's going to put pressure on the banks and the lenders and so on. I've covered this before. But this right here is huge because we are seeing the continuing jobless claims achieving a high it has never been at before. It has far surpassed what we saw during the financial crisis and all of the previous bull and bear markets behind it. These recessions take place from time to time. We do see that, but never to this degree. They haven't even actually come out and said this is officially a recession, but everybody knows at this point. Here's the chart just showing you the American jobs, payroll jobs created since 2010 and jobs lost in the last 4 weeks. All of them eradicated in a matter of 4 weeks. Now we're going to get numbers next week again, and I'm sure it's not going to look very good. You might see that number start to come down. Who knows? It could go up from here. Regardless, it's not good. They're trying to play it off as if, well, because it's temporary, we can simply ignore it, but the impact of somebody losing their job, not getting paid for a month or 2 months or 3 months is big. Now, some of them will get paid. Some of them are getting stimulus in some way, shape, or form. But in general, the wheels aren't turning the way they were, and that makes for some serious problems. We're seeing what's going on with small businesses. They're going to be destroyed. What are they going to do with their employees? They're just going to pay them even if the company goes bankrupt? Even if the store has to shut down? Obviously not. Well, this is very, very short-sighted behavior, and that always ends in much pain, but I guess I'm just being pessimistic. I thought this was really interesting. We'll see what actually happens, but take a look. The Federal Reserve is working on a plan to publish transactions on its website for the emergency lending facilities as pressure builds for transparency over what could be trillions of dollars of support. This would be pretty big because last time around, they had to go in with an audit. They found 16.1 trillion, I believe was the finalized number that they gave out in this limited audit. And what happened? Well, a whole bunch of these bankers, they were put in jail. A bunch of them were fired from their positions. There was a huge restructuring in the financial industry. Oh no, wait a second. Let me wake up from that dream I was having because nothing happened. Nobody went to jail. Nobody got in trouble. And things are worse today when you look at it in depth. Yes, we don't have that massive derivative exposure the same way that they did previously. But are you thinking imagine for a second that these corporations are going to somehow dwindle down their profits just so they fit in this mold? No, no, no. They create new things. Last time we had the collateralized debt obligations. This time we got the collateralized loan obligations. You call it what you want, it doesn't matter. It's a letter in the alphabet, and ultimately it's derivatives. These have grown tremendously. Corporate debt has been a huge problem. Nobody wants to talk about these things because all they ask every day, I get the same exact comments. Which stocks should I buy? You never tell me which stocks I should buy. I'm unsubscribing. Anyway, Congress allocated $454 billion to backstop Fed lending that could expand to as much as 10 times that amount in the relief bill. Now that I thought this was interesting because just imagine that's $4.5 trillion on top of the stimulus they've already pumped in. They're leveraging this up, thinking, well, it's totally fine to do that. We can always use the leverage because we'll take it easy. We're going to be buying anything and everything this time around. They're going all the way down the list from corporate debt and municipalities, bonds, treasuries, ETFs, and everything in between. All forms of debt and financial products that probably in many cases should not even be allowed to exist, and yet here we are. U.S. Federal Reserve assets as a share of the GDP, it's at a very high point right now, but I wanted to note the fact that because we're using the data from the most recent GDP figures that were put out, that still doesn't include the contraction in GDP that we will likely be seeing. So this number is going to get skewed big time, but no matter how you want to track it and measure it, the Federal Reserve's so-called assets, let's put quotes around that just to have a little fun with it, they have grown tremendously. Small Business Rescue Loan Program hits $349 billion limit and is now out of money. So that's it, small businesses, you're done, you're finished. You thought you can get your paycheck, but it's not going to happen. And now they have to go back and they have to decide, well, we want to put out another 250, another 300. Is it going to be 150? Is it going to be $1 trillion? What's the deal? What's going to happen? And guess what? You're not going to see a dime of it. If you got a small business, I'm sure it's going to go to the Ruth's Chris Steakhouse type of establishment that got $20 million. We're not talking about small businesses here. These are bigger businesses. But hey, you got your 1,200, so sit down and shut up. The US is offering airlines a $25 billion aid package, but damage to the sector will be extensive and long-lasting. Industry analysts say it could be 5 years before the industry fully recovers. United Airlines' flight schedule will be cut to 10% in May, and it expects more of the same in June. Travel demand is essentially zero and shows no sign of improving in the near term. But if you look at their stocks in many cases, even though all of this information, the job situation, look at what the airlines are saying, you look at their stock and what direction is it going? It's going up. It doesn't even make sense. It literally doesn't make sense. And when we have these instances, when things are broken, you got to step back and you got to be wondering, how long can it go on for? Look, you could poll the average investor back in January of 2020. I would say upwards of 95% of people would say that the stocks would be going higher. Ask them in early February what they thought. I would say 90% of them would have thought stocks were going higher. And a matter of weeks passed and we saw the fastest drop ever in history. Then of course we saw the stimulus that was coming afterwards and the stocks have come up quite a bit. But it depends which stocks exactly we're looking at. I just wanted to show you this chart from our friends at Deutsche Bank. U.S. airline passenger traffic currently 10% of normal. Look at that just falling off. The chart begins on March 4th all the way through until April 13th. Nobody is flying right now. Basically, nobody is flying. As a result, you are seeing some major problems at these companies. In that previous article, it actually talked about how despite the fact that they're not allowed to get rid of anybody, well, they're probably going to do so in the fall. Philadelphia Fed data has come out, and you could see we haven't seen this bad on this particular stat since the 1980s. These are just a bunch of them all lined up against each other. The Philly Fed, US Empire State Manufacturing, all of them down the list, all looking very bad. But who cares? Who cares about the fact that 22 million people are unemployed? Who cares about the fact that there are thousands and thousands of cars lining up at food banks all over the United States? Who cares about the fact that we have record debt on all levels, whether that's personal, whether that's corporation, whether that's national? Doesn't matter. Who cares about the deficit? You're going to be $4 trillion plus. Who cares about all of that? Because I got 7 shares of Amazon and I'm riding it to the sky. This stock is going to be worth $1 million each. That means I'm sitting on $7 million of liquid gold. That's right, FANG stocks at a record high right now. And why? Largely because of what's going on with Netflix. People are on their service, and Amazon. These are the two that are really pushing it higher. And if we take this into a wider context, the NASDAQ 100 to small caps, comparing these two side by side, we haven't seen it like this since the dot-com boom. Of course, that time, it really didn't end well. This chart here is showing us what's going on with the banks in the US, whether we're dealing with JP Morgan and Bank of America and so on. Overall, for 2019, they bought back over $100 billion of their own shares. These are the banks here that will be getting a bailout, who got the bailouts last time, and who will always get the bailouts. And why? Because the alumni of these corporations work in government, and the revolving door brings them back and forth. But nobody seems to realize that, and it is truly scary when I see it over and over again, people talking about how fantastic everything is or it's gonna be. Just hang in there, just have hope and faith. And sadly, people like being lied to. Speaking of not telling the truth, China says its economy shrank by 6.8% in the first quarter. And while that is a very serious contraction, I think the vast majority of people do believe that it is much worse. To me, it doesn't matter. It's the percentage that we have there. They're going to show how fantastic it looks after that. This is the first quarter. We'll see what the second quarter numbers look like. But assuredly, we're going to see by third quarter, they're going to make them look so good, it's not even funny. And speaking of funny, this was from the Fed's Harker. He said this: we're going to hit a period where it's going to be pretty bad. It's pretty bad right now. We'll climb out of it. It's not going to be a sudden bounce back. I mean, it just doesn't make sense to me. There's going to be certain industries like travel and tourism, hospitality, and so forth that will take some time to recovery. At the bottom here, they start talking about the U-shaped recovery. Is it a V-shaped recovery? Is it an L-shaped recovery? Who knows? It might be an O-shaped recovery. It might be a 7-shaped recovery. It might be a G-shaped recovery. I don't know. Pick a letter, pick a number. At this point, it's all made up anyway. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me, so I want to thank you for that. If you want to see me on Instagram and on Twitter, I do unique content that is not available here on my channel, so definitely check me out at The Money GPS. For those who want to understand e-commerce, they want to sell online, I'm telling you right now, it can be very convoluted as well as expensive to learn this stuff. That's why I created a free e-course so that my subscribers can learn it without paying a dime. You can check that out at theamazongps.com. If you want to understand the foundation, the history, the asset classes, how to make money, all of that is in my 2 books. You can get them at the link in the description if you want the audiobook, themoneyGPS.com. This is such an important video, really a lot of data that I put together. I hope that you will take the time to watch it. Click on it. I'll see you there.